Good afternoon, everybody. Today is Wednesday, the 13th of April, 2011. Let's go ahead and take a look at this market. We had, of course, a little gap higher here this morning, and it didn't really make much progress beyond that. It really made its highs, that is the S&P 500, in the first few minutes of the day here. And we are still below a declining 5-day moving average, and that makes you don't want to be chasing gaps, especially when we're below a declining 5-day moving average, and we have this prior level of support just overhead as well. So the risk reward there really sucked. I don't know who buys there, but it didn't really seem to make much sense. We did close right on the daily pivot and 2-day volume weighted average price, and I don't think there's really anything to read into there. We are seeing a little bit of stabilization in the S&P 500, and as I pointed out on the blog yesterday, when we take a look at the volume weighted average price since the event, or since, not necessarily the event, but since this rally began, that is the March 16th low, right around in that area, the volume weighted average price of this move and every day since then has been right here, and it so far is holding his support. Now, it's not doing it in a very convincing manner, though, because we have still, you look at today's action, we have a lower high underneath that declining 5-day moving average, and we have a level of support. If this support gives way, then I think it's very likely that we'll see at least a test of the lows from March 28th down near about 130 and a quarter or so. And when we look at the daily time frame, you can see it's struggling to hold on to that 20 and 50-day moving average in the S&P 500. A couple of weeks back, I was talking about the possibility of creating an inverted head and shoulders pattern. Now, if we can reverse from here, then we could look at this as a right shoulder being formed, and then the possibility is that we will continue to move higher. Right now, the near term, though, I think we still have to kind of give the benefit of the doubt to the sellers and say, while we're below declining 5-day moving average, that it is guilty till proven innocent, and we want to see this market probably get above and hold above 132.40, 132.50 for at least a half hour or so, and that's $1 higher. But we've been in this situation before where the next day the market gaps up to 132.40, and then it kind of shakes out a little bit and then continues up to 133.5. So be aware of all possibilities here. We did have slightly positive breath today, 1,500 advancers on the New York Stock Exchange versus 1,400 decliners. And when we take a look at other markets, the NASDAQ did show quite a bit of relative strength here today. It was up 0.85%, and you can see that this level that has been important, the $57 level that is, was tested here today. It held as resistance for now, but in the NASDAQ we have this higher low, so we've got a little bit of a mixed message here between the S&P 500, which is more heavily weighted towards technology, towards the financials, than the NASDAQ, which is more heavily weighted towards the technology stocks. And we saw a lot of big momentum names, in particular. Well, we'll take a look at those in a minute, performing really well today, and we'll talk about those, like I said, in a minute. But the NASDAQ here, the NASDAQ 100, if we can get above and hold above that $57 level, then I think that recent short sellers are going to be in for a little bit of pain here, and this is that inverted head and shoulders pattern we started talking about 2 weeks ago as a possible setup here, a possible scenario. So 57 is our near-term important level of resistance. If it can get back above and hold above that 57 for about a half hour or so, and I would think that if the market can gaps up to 57, runs to 57.15, pulls back and then gets back above the volume weighted average price, that it would be a good idea to look at the QLD or the TQQQ, or the just the Qs themselves if you're looking for long exposure to the NASDAQ 100. So what's going to ruin it is if this market gets back down below probably 50, today's low, 56, let's just call it 56.40. The Russell 2000 has kind of led to the upside and the downside here. If we take a look, there were two things, 50-50 basically, and what I mean by that is we're down right to the 50% 50% retracement from this low to this high. So we've got that 50, and we've also got the 50-day moving average that this market is trying to hold on to as well. The absolute value of the 50-day moving average is 81.76. I never view that as a reason to buy, but a reason to look for potential support. And so we've got a 50-day moving average. We've got a 50% retracement. If we take a look at the volume weighted average price since this low here, you can see that we dipped briefly below it today, but the buyers did regain control here towards the end of the day. Now, this is something that I was trading some TNA toward later in the day. That is the double long right in here, and it worked well. But I think that it was basically because we've got a declining 5-day moving average that those longs need to be held only as a day trade candidate. And we've still, this is good to see, though, that we kind of had this little, we had a gap up. The initial buyers who were looking for the lows got shaken out, and a lot of times from that failed move lower comes a fast move higher. So ideally, selfishly, I'd like to see this Russell kind of pull back down towards 82, then come back up through 84 again tomorrow, just to give it one more little shake. But then I think that you could possibly be in for a tradable bounce in this Russell 2000, maybe up to what is going to be this trend line here and near that 5-day moving average. So we could end this week really up near. It wouldn't surprise me to see the Russell 2000 move up to maybe 83, and that's only 75 cents away. So that doesn't sound that far fetched, but 83 to maybe 83 and a half. But obviously, if we break today's lows, that's going to do some further damage to the psychology of the buyers of this market. But right now, it's looking like it's in a likely area for support. I think that if you're buying for swing trades, you're probably still early because of this declining 5-day moving average. But otherwise, that you want to keep this as kind of your go-to long. Now, what's really troublesome to a lot of people today in this market was the action on the financials, and of course JP Morgan that reported earnings. The stock gapped up and completely failed. So people got excited about JP Morgan initially, and really the daily chart doesn't look that bad here. If we can hold in this 46 area, maybe JP Morgan can still recover. And if we go back to the XLF, the financials, this market couldn't make it up to the declining 50-day moving average. In fact, it opened right at that declining 5-day moving average right there, and it was immediately sold into. So if we take a look at the 1-minute chart, you can see it gapped up and just sold off and stayed below that volume weighted average price for the entire session. So the financials are clearly not the leaders right now. In order for them to lead, they're going to have to get back up above 1675-ish area, and to me they just kind of seem a little bit more neutral than anything. The semiconductors, if we break down in here, then that could be a bigger reason for concern as well. So you still have to be very flexible, I think, in this environment. If you look at the outperformance of the Qs versus the SPY, it gives us a little bit of encouragement. The area where the Russell 2000 is, there's some good reasons to think that possibly will bounce at that 50-day moving average, the volume-weighted average price, and the 50% retracement. But you look at the semiconductors that are, now for the third time testing this 100-day moving average. This is action that's really indicative of later cycle. Early in the uptrends, we get supported a rising 10, then a 20, then it's the 50-day moving average, and then the 100-day, and then the 100-day gives way. We go down to the 150 and the 200-day moving average. And while that happens, slowly the weekly chart becomes more bearish. Now, there's nothing really bearish here necessarily yet. We have the possibility that this is a lower high, and if we break down here, then that's bigger trouble for the semiconductors. But right now, I think the semiconductors are kind of, you have to look at them as on warning more than anything. They have the potential to do damage here. Last week they were looking bearish, and then we had the Texas Instruments National Semi deal. That gap was given up obviously yesterday, and we're right back down to these lows. So I think the semiconductors are vulnerable, and that could potentially be a drag on this market. So definitely something to be aware of. there. Let's take a look at silver, because everyone called a top on silver 3 days ago, and so far they're right. That's the highest it's been. It hasn't gotten above that, but silver is holding. It's recovering above this rising 5-day moving average, and get back above 41. I think that some of those early top pickers, could get squeezed out of here. So just be careful with that, I suppose. I did want to talk about, let's see, the retailers I looked at yesterday. I forgot to mention these actually, but the retailers are right here at the highs for the year, and you look at some of the stocks in that group. Not necessarily. I don't know if they're probably not part of the group, but you look at stocks like Under Armour behaving very well here in this uptrend, and broke a little bit of resistance late in the day here. We've got that 5-day moving average kind of flattened out, about to turn higher. I think Under Armour could continue to move higher. You look at Ralph Lauren, very bullish looking chart still up in this area. DECK, it's not the retail, it's not part of the retail index, but this is as high as DEC has closed. This is the last quarter when they reported earnings, and we've seen this nice little consolidation in here, this nice little bullish flag, and stock looks like it's probably heading now for $100 a share or so. We also had good strength from CMG, which broke out in here today. MasterCard broke out to multiple year highs. Sohu is looking good. So there's a lot of strength in the big names. Cerner is one that looks like it's holding that 20-day moving average. Meli, M-E-L-I, recently just broke out and ran here, and it's consolidating in a tight range. So there's still good strength in a lot of different stocks, and other stocks which are supposed to be breaking down aren't. Here's the obvious level of support that will be concerned for Apple, and we do have two lower highs. We have this high, then two lower highs, so we break down below this level, though, then I would be very careful with Apple. But there's still, like I said, there's just a lot of areas where the market is holding up. FOSL is another retailer that's doing well in here. So there's a lot of strength in a lot of different areas. Some of the stocks that we were looking at Alpha Trends include this EXAS. Slower stock, I guess, but it does trade 700,000 shares a day, and looking like that's still heading higher. I'd say that stops now on EXAS probably ought to be at about 7 and a dime in there. And what was I? Just got distracted. We were looking at Vertex today too. Vertex really needed to get above these highs, and Vertex really, it's a good looking daily chart. You look at how this range is tightening in here, and just the strength of the semiconductors, not semiconductors, but pharmaceuticals recently. This Vertex has broken beyond this multiple year resistance level at about $44 a share, and now it looks like the stock still has some room to run. It's consolidating in this tighter triangle, like I said, but couldn't get going in here today, so it probably isn't likely to go tomorrow or the next day, but I'd say you probably want to keep your eyes on that. CMG was one we had our eye on as a break above this level, and it did get going nicely. INHX is still kind of setting up. I told people we want to keep an eye on this one. I think it needs to really, the level that looked of interest was 420, I think, in here. But INHX, the average daily volume is 1.2 million shares. It's pulling back. It didn't hold the 10-day moving average, so a good reason not to buy a pullback to a moving average. And you look at the 30-minute time frame, we are still below that 5-day moving average, which is declining. So it's actually probably about $4.40 it really needs to clear. But this is one that could be setting up, so I would say keep an eye on it. Keep an eye on right now as well. RNOW is holding up really well at highs here, and if you look at the longer term chart, it's really not that far extended beyond this breakout from $22 a share. It's run about 50%, but if you look at it in relatives to some of the other stocks that have had these big runs, this is very reasonable to think that this one could continue to move higher, and it might need to clear 3350-ish to 3375 for right now to really get the momentum. So I'd keep an eye on that one. Under Armour, like I said, has been a good one. PPDI, this is another pharmaceutical that you look at the weekly chart here on PPDI, and it broke. You could call it. You could call this a big cup and handle. Here's our cup. Here's our handle, or you could say ascending triangle if you wanted. But it broke that resistance in that 29-ish area, and that was multiple years of resistance in there. That resistance is holding as support. You can see the volume is trailing off real nicely as it holds up in here, and this is a good stock to keep your eyes on. In particular, I think getting above the highs of the last couple days near about 31.05, 31 and a dime, whatever this level here is, probably about 31 and a dime. If it was to get above there, I'd say a worst case stop would probably be below one of these higher lows, whichever one would be most comfortable for whatever risk management you're personally comfortable with. But nice big volume rally and tight consolidation here so far on diminished volume relative to the advancing volume. QSFT was one we had our eyes on for a potential short, and like a lot of shorts, is they look like a short and then they fail to break down and then squeeze them higher. So I think that one probably not worth really keeping an eye on for now. We also were trading this REDF today, and I think REDF still has the potential for a bigger move. If you look at the weekly chart and where this stock is, we put a horizontal line on this, and if we can get past this level, I think that close to $10 a share seems reasonable. And I'm kind of surprised that it hasn't done it yet, because if you look at their the stock that runs with it typically is this SIFY, and SIFI has broken its resistance. It's had this bigger move, and it's just been grinding higher until now. We're getting where you could arguably say is a blow off top in this, but SIFI has shown some remarkable strength here, and REDF has really kind of lagged, and it's a pretty damn choppy stock. Be aware of that as well. But this level, in particular, last week's highs near 855. Let's just take a look together and see what that level is here. This high was 855. So 855 above that level, it could really get going. It was choppy in here today, gapped up, pulled back, and then this afternoon began to run nicely. But I would definitely keep REDF on your watch list. It trades 1.9 million shares today, which was double its average daily volume. VeriSign is another one that is this high was 52 cents, 57 cents, and VeriSign was a nice trader in here today, just kind of grinding higher like it is on the weekly chart. But let's take a look. Let me see here. I've got a couple requests on Twitter for stocks to take a look at. So let me see here. Well, first up, thanks Steve and Andy for the retweet. Jack, Jeffrey, thank you as well. How about a look at Squinum, SQNM? Let's take a look at Squinny. Weekly chart really just kind of looking kind of neutral here. I think that there's really nothing special going on that I can see on the weekly chart. It broke. We had a lower high and lower low here. Now it's back up to this prior resistance. We've got all this bigger level from last year in here. It's recovering, trying to hold that 200-day moving average, but I don't really see anything of particular interest in here on SQNM. Maybe there's a good story to it or something, but on a 30-minute time frame, it's nice to see it got back above that 5-day moving average. If you're long, I'd say worst case stop would probably go below today's lows, but again, I'm not really seeing anything that looks technically stand outish to me. Costco, nice uptrend here, broke some resistance at 75 on some volume, light volume consolidation since then. Let's just back it up a little bit to the weekly chart, and we can see we are at multiple year highs. Go back to a monthly time frame, and these are all-time highs. So, this is the type of stock, obviously, that's also helping the retail group, and I think that it should probably be poised for further upside, probably breaking above these highs of the last couple days. If we take a look at the 10-minute chart, that's going to look, probably a 5-minute chart, that's going to look like a little cup and handle here the last 4 or 5 days. So probably getting back above this area here, then it puts the buyers back in control. So by getting back above maybe, what is this level, 76.80ish, then I think that Costco could continue to move higher and put a stop underneath either this higher low or this low right here. But it's at all-time highs. There's probably, I would imagine, a decent short position in it. We can check that. COST. So there's 6 million shares short. That's versus an average daily volume of 2 million shares. They have been covering here over the last, since the beginning of the year, that number, they've covered 4.2 million shares of that short position. So shorts are prudently moving aside in here, I would say, because the stock looks higher. So looks like that's the only request I have, so I'm going to shut this down. Thanks everybody for tuning in, and we'll talk again on Friday, same time.